Hello and welcome to another episode of Daily Market Mastery with me, Rauchenwald, on this sunny Thursday. I hope you all had a great week so far. As always, in this live stream, we are going to take a look at my portfolio, my positions, and what I plan to do with them. So how I plan to adjust them, as well as some forecasts, so where I think certain stocks and indices are moving. Before we get to that, as always, however, let's get the usual disclaimer out of the way. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Last but not least, all the tools that I'm using, so the charting software, the broker, the strategy I'm following, and so on, are linked in the description down below, so you can check them out for yourself. And the one thing I recommend for those of you who tune in for the first time is to actually check out the Elliott Wave principle. You can read it online for free if you use the link down below, or get yourself a physical copy. Yeah, that's pretty much it. With that, let's jump right into my portfolio. There we have it. Not much change today so far. Yesterday we had some interesting movements. We're actually going to switch into Motive Wave, the software I'm using for charting. It looks more and more like we had a wave 1, 2, 3 in GameStop, with a wave 4 finished here as well. We can even with the naked eye potentially see an A, B, C movement here. If we apply Kennedy channeling technique, although it's a little bit of a challenge, to be honest, to determine where exactly we have our wave 1. So does it finish here or does it finish here? I assume it's this point here, the end point of wave 1 for that, which makes this here potentially point 2, which means we can make a channel like this and have our base channel here. And then based on Kennedy channeling technique, the moment we have a breakout from the channel, we are in wave 3. And then very often wave 4 we can use another channel for that. Wave 4 would be if we take the point here, take the point that we consider point 1, so where we have basically wave 1 till here, and a parallel to point 2. The moment we have a breakout to the bottom is when we are theoretically in wave 4. So theoretically we should be in wave 4. Wave 4 often touches the top or the median of the base channel, which happens here, which would have been potentially a good entry point. And now basically we're in the so-called deceleration channel, and in order to know when we are actually in wave 5, we'll need a breakout from this channel. So based on Kennedy channeling technique, the wave count would therefore be 1, 2, 3, 4, and now we're waiting for wave 5. And which means we should potentially finish this week above 30. Yeah, what is there to add? It's possible that the corrective pattern here isn't finished yet, so then we would get a little bit more downside. But if we just base it on Kennedy channeling technique and the fact that we, in quotes, bounce from the median of the base channel, it's more likely, in my opinion, that we're done here with the corrective A, B, C pattern, and that we from here now get to see the next 1, 2, 3, 4, 5 up, which should then take us into the target area for which we can take point 4, or what we believe to be point 4, point 2, and a parallel through what we believe to be point 3. And then the end result should be that the price touches this line or this line. Now, we don't always have to make a new high in a fifth wave. So if this is indeed 1, 2, 3, 4, 5, wave 5 has to recover at least 61.8% of what was lost during wave 4. However, we would expect a new high. If we use an expansion here, we can take our point 2, point 4, and our point 3, and then we get the potential profit targets, with the minimum target, in quotes, or most likely target, being around very close to the $30 mark, as we can see, and the maximum target, or like secondary target, at around $31.83. Now, those are not set in stone. Price can always move higher, price can fall a little bit short, but those are like the, in quotes, most probable candidates. In other words, assuming we're right and wave 4 is finished here, we would now expect a set 1, 2, 3, 4, 5 to take us anywhere between 30 and 31.83 to finish up this wave 1 altogether. Then we get another corrective wave, and then we have another impulsive wave up. So much about GameStop, which means like it remains to be seen if this week we will finish above 35. As you should know by now, if you watched the previous episodes, I sold 5 covered calls at a $35 strike price, which means if we finish above 35 tomorrow, my 500 shares here will get called away at $35. I got them assigned through $30 put options, which means for each of those calls, I would lock in $500 profit from the shares, plus the option premium on top of everything. If we stay below 35, I just pocket the option premium, and on top of that, I just pocket the option premium, but I get to keep my shares. Now, that much about GameStop. I mean, market's going to open or is opening right now. We're going to see how that plays out. But right now, I would say we have a wave 5 still to count, which means we should not fall below 27, but actually most likely see this as 1, 2, 3, 4, 5 for wave 1, and then so on, and go up from here. So immediate future, unless I mislabeled something, I would say from here we are going further up. And remains to be seen if tomorrow we finish above 30 or not. Right now, based on this labeling, I don't think we will touch the 35, which means I'll get to keep my shares longer, which means tomorrow I can roll my call options into next week. And volatility should have increased a little bit. And for the $35 call options, as we can see, right now I'd get around $120 per piece, so around $600 premium for the week if the volatility increases a little bit, because by tomorrow those options will become a little bit cheaper. So either the volatility has to increase or the price has to be higher to still get that, or potentially more. Ideally, tomorrow we would trade around $34.50 or so, because in that case, potentially I could get around $200 or more than $200 per option for more than $1,000 weekly premium, which would be more than 5% return on the week for the portfolio just based on the options premium. Now, yeah, one thing we looked at recently, last Friday you can check out the stream from the 12th, was the, just a second, can we just, where's the chart? There, yeah. Was gold futures. They're already open here. And it's interesting. I'm going to have to zoom out a little bit probably. We're still not in our overall profit area. So we looked based on weekly charts and so on. And you can see those big lines up here. So 2,500 and so on are actually the profit targets for the labeling. But even short term, if we take a look, based on this pattern here, we made our prediction that we will at least reach, no, we already had that, so that line we drew. And here we touched our profit target, interestingly enough, almost on spot. So our profit target was 2,430, or almost touched it, and we hit 2,430. So yeah, here we pretty much perfectly hit the 100% extension level. However, we then also assumed that this might be 1, 2, 3, 4, 5. So right now, I'd expect here wave C to take us down a little bit. I'm not going to bother to try to determine it perfectly. However, again, like we covered the whole thing on Friday the 12th with the prediction that from here we will have further upward movement into the profit areas that I showed earlier. Now, right now, I said this should be a corrective wave. As said, potentially this is 1, 2, 3, 4, or 1, 2, 3, 4, 5. And now here we get A, B, C. So there should be A, B, and wave C should take us a little lower, maybe 2,440. I'm not going to try to label the exact target area, but that would be my rough prediction right now. And then from there, we should get the next push up. So in other words, personally, what I would do if I were in gold futures right now, I would take my profit and wait for a re-entry lower here, somewhere in that area, or better put, like use Elliott Wave Theory to try to determine the exact target area here for that corrective pattern. What's possibly an alternative? It's possible that this is already entire corrective pattern and we would get a 1, 2, 3, 4, 5. So on the other hand, if we go above, what do we have here? 2,478.50. I would also re-enter again. simply because then it's likely that that corrective pattern here is finished and we get the next push up. Yeah, so which means potentially if we were to get out here, we could potentially get in better again here, or it was a bad exit and we miss a few points of recovery or profit and just make an entry again here. Either way, our prognosis or forecast from the 12th actually so far is holding up. Remains to be seen. There's still like 2% growth, I think, 2 or 3% growth overall. Based on the weekly chart, it's going to look a little bit chaotic, but basically that's the first profit target that we reached, and then we have the bigger at 2,553, and then we have right now basically we're in this fifth wave, and for that we actually don't have the there we have it. So there's the profit target. So 2,584, 2,757. Those would be the profit targets that basically I think we'll see in the gold futures based on Elliott Wave Theory. However, we also have to consider that this is actually the 100% target of a bigger wave. Therefore, I'd say it's most likely, or in my opinion, most likely that we see the 2,584 as the top in this movement here. Maybe touch 2,600 and then bounce from there. So yeah, as said, we covered that in the episode in more detail on the 12th of July. So last Friday, you can check it out if you just go to the channel. And that much, save that. That much about gold. Now we have a few other things, but before we look at them, let's actually look at short interest for our positions. And I'm gonna drink something while I'm opening up the report. Don't forget to hydrate, guys. Daily report for yesterday. There we go. So if we scroll down here to our usual weighted stock yield enhancement program, we can see that right now lend activity, that's the important part. So we can see my GameStop shares are no, that's not what I was looking for there. Here we can see my GameStop shares are being lent out again. They haven't been lent out for like 2 weeks or so, but we can also see that the net fee rate is 0.10%, which means whoever borrows them at Interactive Broker actually pays 0.2% interest, which is not a lot. On the other hand, we can see for Green Wave Technologies, the net fee rate still is at 57% like it was yesterday, which means whoever shorts it right now by borrowing shares from Interactive Broker is paying an astonishing 115% interest per year, which means pretty much they would need to have it go to zero in less than a year to be profitable. Otherwise, they already pay more interest and they could make profit, which is insane. Costs. Here we see interest rate. I think I'm going to open up, 1 second, I'm going to open up the report for the day before as well so we can compare it because I don't fully recall it. So 1 second, statements. So for the 16th in that case. So stock yield enhancement program somewhere. Where are you hiding? Here. Okay. So G-Wave, we see it was at 57.93. It's now at 57.68. So not much change. GameStop wasn't lent out at all. Now it's lent out a little bit. Not even. I mean, we hold 500 shares and not even half of those are lent out, which is an important thing to consider. Cost was at 17.7. It's now at 12.57. So they are apparently some shorts closed, or more shares are available for shorting. And SunPower is now at 7.10%, so 14.2% effective interest. So in SunPower, the interest rate is almost doubled for people borrowing the shares, which is an interesting aspect. Let's look at the SunPower chart. It's going a little bit down here. I think, as said, from a pattern perspective, as long as we stay above this line, we are good, and this might likely turn into 1, 2, and then we get wave 3, 4, 5. So for upwards movements, remains to be seen, and it's going to be interesting. But I think the only other or secondary trend line that might make sense here to give us a little bit of an additional confirmation then is, we already broke out of that trend line as well, so never mind. So then, however, I'm sure we can still have one that's not broken, like yeah, not really, nothing that fits. Okay, so as long as you stay above here, so even if we go down a little bit, I think then we'll get wave 3, 4, 5. For wave 3, if we throw an extension here, so assuming that we are right, correction finished here, this is basically a big wave 1 and 2, and then for wave 3, we would expect it to go to $4.10 to $4.40. So that's an almost 100% increase. Obviously not overnight, but then over the next couple of weeks. So yeah, that's going to remain interesting. I mean, if we can free up, so if our GameStop shares get called away, we might actually increase our position in SunPower because of that. Stop loss would need to be ideally, I mean, theoretically, it could be at $2.02 if we really believe this is ABC finished. However, on the other hand, stop loss would need to be at $1.63 so that if that correction is not finished, we don't get stopped out here just to then see a turnaround. Which means we have less than 50% risk with more than 100% upside if we are right. So definitely not a bad trade. Unfortunately, I said my capital is currently all tied up, so can make the trade, but we're gonna keep an eye on that. So, and it's interesting to see that the short interest, or like how much people pay at Interactive Broker at least, to borrow shares to short increased slightly, so not by or almost double actually. Yeah. For costs, on the other hand, it reduced a little bit, which might mean some people short close their short positions. It might also just mean more people bought. I think the pattern here also holds true. We have our ABC finished here, and we have our breakout from here. And with that, we might have our next 1, 2, 3, 4, and now wave 5. And basically from here, then our upwards movement. So we're going to hold those shares longer. If we were to just enter or so, we could have our stop loss at around $8 at the low here. So under the assumption, okay, we are wrong, the corrective pattern is not finished, we go out here. The only other alternative valid point would actually be down here, and that's like a 70% risk. So, yeah, like we're kind of a little late to the party here. We entered at 10 because we had the 38.2 retracement and the potential 100% target for wave C. Here, yeah, so we're right now pretty much break even, slightly in profit. We're going to see how that develops further. And with that, we covered SunPower, we covered cost. We still have a few other things to look at, but let's first check short interest-wise. Green Wave, there we said, I'm going to double check again. So right now, the short interest is 57, and it was 57.93, and now it's 57.68. So it's pretty much unchanged, which means, again, people borrowing shares at Interactive Broker are paying more than 100% in interest to actually bet against the stock. And they've been doing that for days already, and we see we barely move at all. So despite them paying a fortune, I mean, paying 50 or more than 100% in yearly interest, in the hopes to push down the stock is, in my opinion, insane. Yeah. Which means there is a decent potential. I mean, Elliott Wave Theory doesn't much apply here because we just had an endless downwards pattern. And the question is this the bottom? Because it looks to me like this might be the bottom if we consider that despite the huge interest rate that short sellers are willing to pay, we barely nudged. And so we had the reverse split, if I'm not mistaken, here. And after that, it was just, yeah, bashed down. If we have our turnaround point here, this might be the cheapest entry for years to come. And I think considering that it's at around let's say $1.50 roughly, I mean, it's a little bit more than that, but around that, yeah, I think this is something, again, it's just my personal opinion. Please do your own research. Don't invest money you cannot afford to lose and so on, yeah. So don't blame me if something backfires, especially since I'm currently, how many shares do I hold right now in GWAV? Almost nothing, I guess, yeah. 300 shares, yeah. So I'm not in there with thousands of dollars or so. So if you think you want to bet your house or so, again, make your own decisions. Don't blame me if it goes wrong. But if I look at it, that's one of those cases where there is no Elliott Wave Theory pattern where I can say, okay, based on that pattern, it looks like we have that wave and it will go there. This is purely a speculative speculative trade on my end, because I believe that the business that green wave technology represents, so recycling of metals and so on, has a future. I also believe that if I look at the interest rate people are willing to pay just to short the stock, again, it's 115% per year interest. So if you short it right now and within a year the stock does not go to zero and you didn't close your position, you're actually at the guaranteed loss because you paid more in interest than you can make profit if they go broke. Yeah. And so right now, considering that it's cheap, so even if you just, I don't know, like me, I just got 300 shares, which is like, and I think they're the loss right now because I ended a little bit earlier. Yeah. So GWAF, where do we have it? Yeah, $64 loss. You see, I basically invested a little bit less than $600 to get 300 shares. And there is the chance that if we look at how much it's shorted in quotes, so how much people are paying an interest rate to get shares to short it, and yet it didn't move much more for days already. So we are kind of flat here between, what do we have here, 150 and 170. This may be, doesn't have to be, but this may be the bottom, like the all-time bottom, and from here we will start to see slow but steady development with the chance of some minor short squeezes along the way, because if you have to pay so much interest, like there seems to be not a lot of, or not either huge demand for shorting it or not many shares available to short it because of the huge demands of shorting it. Either way, if it just increases by, I don't know, like $1, I mean, it's insane, not insane, but I know that it's a lot. But I think that they're even a relatively small movement, so pushing it up a little bit might force some short positions to close if we consider everything. So that they have the over 100% interest rate, and on top of that, the like the loss with their position with every increase. So of course there are probably some people that shorted from, I don't know, $10 down or so, that are still at a decent profit, and even if they pay 100% interest, well, then it's on their current value and not on the value they borrowed it at, if I'm not mistaken. So, but still, I think green wave is something that, I mean, I'm gonna if I free up some capital from getting the GameStop shares called away, for example, I would then increase that position definitely. Simply also because, well, it doesn't offer everything that I'm looking for. So we don't have a valid Elliott Wave pattern, okay? And we don't have call options that we can write or put options to sell to earn options premium, which is a little bit of a pity. But just holding it, especially, I mean, of course, there's the risk of it losing in value. So I entered at around $2 per share. We're at 160, blah, blah, blah. But just holding it right now earns more than 50% interest per year. So if things stay the way they are, the money I earn from the interest alone from short sellers is already compensating for more than for the drop from my entry point at around 2. So around here, I guess, yeah. So, so like that's definitely something worth looking at. And it remains to be seen. It's going to be interesting how this develops. We're going to keep an eye on it. So with that, we have GWAF also covered. And immersion is something where we hold an astonishing 5 shares. Based on my previous labeling, I thought that we have the top here for our wave 5 and might now get our wave ABC. So I actually got out and then re-entered a little bit better, but still the new position is like at a small $4 loss or so. I think right now, so we haven't hit the 238.2 or the 261.8 extension levels yet. We don't always hit them, but often enough, if this is our wave, where do we even come from? Here, if this is our wave 1, 1, 2, 3, 4, 5, yeah. So I don't know where that pattern comes from. That actually should be here, yeah. So that was a little confusing, yeah. So if this is our wave 1, 2, and we make an extension here, then very often wave 3 will hit those levels. And if that's the case, then we would have 1, 2, 3, 4, 5, and 5 should still have a little wiggle room before we actually correct down. Now, it's also possible that we're already done here. And in this case, we would expect a retracement down to the top of the base channel. Again, not always, but often enough. And then in the form of, for example, ABC. And then from there, we potentially would then get our wave 5, which should then take us higher again. So since I only invested around $50 or $60 here, it's perfectly fine. And even if we go down here, it's going to be perfectly fine. But I think that in the not too far future, there's going to be more upside to come. And we're going to have to wait for that. And our costs we already covered. Yeah. And I think with that, we covered everything for today or not. Like, let's check. So we covered GameStop. GameStop we're going to circle back to in a second. We covered immersion. We're not going to cover Barnes and Nobles. I mean, we can quickly take a look. Barnes and Noble, Educational, and Neo. Those two we didn't. So BNet, pattern-wise, still the same thing. So we don't have a perfect pattern. We have that outlier data source here that screws up the chart. And the big question will be, will we stay above the 379? So which makes it possible that this is indeed 1, 2, and from here we would get wave 3. One thing to consider, how many shares do we hold in BNet? Like 10, okay, not too much, yeah. But even those 10 are not lent out, so nobody's borrowing our shares right now. So there is no 50% net fee rate that we earn or so. So any hopes for a short squeeze or so, or that it's so heavily shorted that shares become hard to borrow or whatnot, seem to be misguided, in my opinion. But yeah, so we still hold those couple of shares, either that is indeed 1, 2, and we'll get to see positive development, or it is not, and we'll see our handful of shares just go poof in quotes, but it's okay in that case. Yeah. Neo, do we have? Yeah, there we have a similar situation. We assume that we have our bottom here. This is 1, 2, 3, so we wait for wave 3 at least. Yeah. And in the smaller scale, that should be 1, 2, 3. Right now, we're waiting for a breakout from roughly this trend line here, or trend channel. If we get that, great. If we bounce from here, then we would have to consider that maybe either that corrective pattern is not finished, or maybe the entire downtrend is not finished. So for now, still not the point to throw a lot of money at it. I think that if somebody would want to enter now, their stop loss should be at either 414, so like a 10% risk. Upside would be more than 50 long term, so we're talking about months, or at least weeks, but probably months. Alternatively, the second stop loss could be at 405, so 15% risk, which would be the, in quotes, better, because it also would still work if we just got the corrective pattern wrong. But overall, we're still right with the bigger 1, 2 pattern. So in this case, we could go lower here, but not lower than this, and then get our breakout. So yeah, again, I don't have any funds available. If I would have to choose right now, I think, I mean, GWAV, we don't have a pattern that supports the theory that we're going up. We just do it based on almost no downwards movement with insane interest rates we get from lending out our shares. And then SunPower. I think right now, if I'd have to throw money at something, it would be SunPower, considering that Neo costs more. So Neo is $4.66. SunPower we get at half the price. SunPower we might have, yeah, like a little bit more risk overall, depending if we put our stop loss here at $2.02, so if we put it down here at $1.63. But I also think there is more or short-term upside. But yeah, like, I mean, that would be me. Now, let's look at SPY. Yeah, there we still have to wait. Like, on first glance, this could already be a set ABC. We covered it yesterday, and from here we get the next 1, 2, 3, 4, 5 up. It's possible that this is just wave A. We now get ABC, and then we get wave C down, in which case things would get interesting. Yeah, so here anyway, I don't have the funds to trade it right now, so we're just gonna keep an eye on it every week. And once we have funds freed up, we consider if we again want to make an option play or not, like we did during this phase here. So down here, where we actually entered here with our options, so almost perfectly. Around here, we bought the 550 put and 549 put options. Unfortunately, held them a little bit too long and exited them here for a small profit. Yeah. Either way, NVIDIA is also always popular. We already covered a couple days ago. Actually, I think also last week we covered the expectation that this might be ABC and expected actually a turnaround at around 133 point something. It went to 137, so we didn't get it fully right, but right enough. And now it looks like we have wave 1, wave 2, wave 3 goes to the 1618 extension. Now we get ABC up, and then we get wave 5 down. And I think we'll hit 110 here. We might even get a bigger drop down, but I think 110 is kind of like the safe choice here. Entering right now doesn't make much sense. We would have to have our stop loss at 137.32. I mean, I mentioned it a couple days ago when we're still here. Yeah, the entry would have made sense. We would have had like 7 points up or $7 per share up as risk with like more than $20 down. So like a 3-to-1 ratio basically. Right now entering, I don't know if it makes still any sense. I'd then rather, I'd rather wait for the pattern to play out, although we need to wait for a turnaround signal. So because like the ultimate target for wave C would be here at around 94. But if we get a pattern that's solid 5 waves down and then get a visual confirmation of a 1-2 starting, I'd rather than wait for a long entry. Yeah. But overall, I still think Nvidia will drop further. In that case, what's that? Another 10% from 120 down to 110. Worst case down to 95, but I think the 110, that area here is a solid bet in quotes. Again, that's just my opinion, not financial advice. Don't lose your house. Just, don't risk any money you cannot afford to lose. Yeah. Anyway, with that, we covered everything we invested in. Nobody has asked in the chat for analysis of something else. I mean, you can always, if you want me to look at some other assets, stocks, indices, or so on, like feel free to just point it out in the chat. But since that didn't happen, and I anyway have a few other things I want to get taken care of, this is it for today. There will be no stream tomorrow because I'm actually spending the weekend somewhere else. So I'm not here for the market open. I will just tomorrow roll my options then in the evening, or have the shares called away depending on where GameStop is. Actually, yeah, before we forget, we wanted to quickly look at GameStop again. Yeah. I think we covered it initially, so I think nothing changed. As long as we don't fall below 27, this ABC pattern stays valid, and this might be the next 1-2, and from here we get the next 1, 2, 3, 4, 5 up. Yeah. So I think, as said, like based on this, I would say next target's 29.89 minimum to 31.83. And question is just, will we tomorrow be above 30 because there are a lot of call options for that, or will we go higher? It's a pity that I sold the $35 call options, not the $30 call options. But on the other hand, it made a difference only of like $150 in premium. And with the $35 call option, I actually make sure that I get to keep my shares in quotes unless we get a rally to 35, and which will give me the chance tomorrow, as said, then for next week to either sell again the $35 call option for potentially maybe $600 in premium, or say, screw it, I'll sell the $30 call option for more premium, but once we go up, I don't earn anything or as much with the shares. Either way, it's going to be interesting tomorrow. Any strong movement means the volatility or implied volatility will increase, which increases the premiums that I can earn from the options, which is in my favor. Yeah, and ideally, I said we'd move to 34.99 actually tomorrow. So to maximize the $35 call option premium, or maybe get me to sell $40 call option premiums. Either way, anyway, I'm going to take care of that tomorrow. One last thing we can actually do, funny, I'm going to circle back. So as you know, based on the stream of Keith Gillen, the guy that made probably $1 billion with GameStop, I mean, nobody knows exactly, but he has an 8-ball and decided to get one too. So let's ask the 8-ball, will GameStop finish above 30 tomorrow? So will GameStop finish above 30 tomorrow? No, it is decidedly so. Okay, then will GameStop finish above 35 tomorrow? Outlook not so good. Yeah, it's exactly my opinion. Interesting enough. Yeah, it's hard to believe how often that random thing actually provides exactly the answers that I would also assume. So yeah, the 8-ball things will finish above 30 but below 35. So let's see if it's going to be right. Anyway, thanks for tuning in. I hope you have a great rest of the day and a successful trading day, and also a nice Friday and weekend. And then we'll see each other actually only next Tuesday, because there is a high chance that I'm also not going to be back before Monday evening. So don't forget, like, subscribe, enable notifications so you get notified when a new stream goes live. And